What's going on, guys? Hope you guys are having a good day. Today I'm going to be doing something a little different. I am kind of going to be doing like a little thesis video on what I think about what's going on with the economy and just recent economic data. Because the world of finance has been absolutely crazy, and so I am very up to date with news. We had CPI data Tuesday, came in at 2.3%. Lower than expected. Market rallied off of that on for day two. China and Saudis had a deal, which is huge. So that's been on and off in the market, providing volatility, insane setups. I, in fact, have actually had to size down on these setups for my own risk management. But absolutely insane. And kind of moving forward, like what's going to happen, right? And I just kind of want to make this video just to kind of keep this from on record, and maybe I'm wrong, maybe I'm right in the next few months. But if you guys look back at the presidency of Donald Trump, 2017, it was the same playbook, right? But it was on platinum, gold, and aluminum, whatever it was, 2017, and just a tariff war, and we had that volatility in the markets. And it's very, very similar to what we're seeing now. And given the CPI data that came out and PPI data today coming in lower than expected, I think that maybe the Fed might decrease rates coming these few months in the meetings. And what's interesting is the 10-year yield bond is still rising despite all these other factors in the economy. And I think that based on the uncertainty in the markets, that leads to very much high fluctuations because things are already considered into the price in the markets. So if you guys know, the stock market considers things in advance, right? It's the most reactive factor in the markets compared to like real estate and all those other industries. The market usually takes those things in advance, and when it has uncertainty, it does not like that, right? We saw that in April 7th and April 8th when the market was just rallying, got into bear market territory, and then we saw that 90-day tariff relief where the market insanely rallied and everybody was making money, and that kind of was the bottom of the market pretty much, and I was buying at those lows for my long-term portfolio. And my thesis has been all along that, look, this is the same playbook that we're seeing with Trump in 2017. So could it repeat itself? Could it be different? Yes, it can be. Am I willing to put money on the table for that? Yes, I am, right? And now we're starting to see how the market's reacting, right? Now we're kind of so-called in a news-driven bear market, where any sort of news is potential to the upside or to the downside, right? If there's some delay, that's going to spike up the market to the upside, right? If there's some sort of tariff announced again, and that might drop the market. So in my eyes, I see the market as an opportunity right now. I think that a lot of this stuff was very, very overvalued before Trump got into presidency. You saw the market top out with Bitcoin topping out. Every time that we try to break higher highs, the market would just struggle, and you could just feel that and see that. And then eventually we topped out. January came, the market reversed, and a lot of people were panic selling. A lot of margin calls were happening as well. And so now we're seeing this kind of shift slightly with tariffs, given the economic certainty now, the relief. But yet still the recession fears as well has been a bigger talk in the picture, right? Are we going to go into a recession? What's going to happen? And I think that with that, right, there's always an opportunity. And given the amount of prices right now in the market is offering 30%, 20% upside, 40% discounts. And what industries might get affected more? Probably the heavy businesses and the consumer side, because costs are going to go up, and you can see Walmart already seeing that. Increasing prices. So my thesis going forward is if we keep seeing these reliefs, right, then the market would rally, and that's the potential of the market rallying, right? And so given the fear in the market, I think people should not fear, and I think they should see it as an opportunity to buy, like I have been buying at the lows. Assuming that you're buying really good quality stocks, like Palantir has been such a good stock that's been very, very negative beta, you can say, against the market, given the amount of uncertainty. It's held up pretty well, making new higher highs. That's been one of my best investments. And I mean, it's just the market. It's just a lot of psychology, behavior, you can tell. And just moving forward these next few months, I think that given that the Fed has held rates right now, we could see a rate cut this upcoming months. And when we see that, money will get cheaper over time to prevent a recession. And if it's too late, then we have a recession. There's more opportunity in that. But if they do cut rates, then markets should begin to rally, recover. More certainty would be in the markets. More money would be in the economy, quantitative easing, and vice versa. So I could be wrong, but cryptocurrency has been booming as well. A lot of that has been, with the M2 money supply. If you guys see the correlation between that, M2 money supply has been flowing into cryptocurrency, which is insanely crazy. You can see the correlation there, and it's like almost like a hedge with gold. And we saw that in the last bull run when we had COVID, just as a hedge with the market. So I think it's insane. I mean, I don't know everything, but just thought I'd post this, guys, and just see what the market does here in the next coming months. And yeah, so you guys have a good day. Peace.